Welcome back to my YouTube channel. Today I am talking about an industry, a specialty chemical industry. In last couple of years, there have been a lot of movement in the stocks of this industry. So let us go dive deep inside and decide about some of the contender and good stocks in this industry. A specialty chemical industry. Looking at the background, there have been a lot of buzz around. Some of the stocks have risen 3-4 times in last couple of years. One of the reason is China consolidating, and at the current situation of China, countries worldwide are looking for alternate sources. So countries like India, Vietnam, Indonesia, they are the potential contender. Although in last decade, the India export has just grown by 50%, but in the current context, looking at the present scenario of the country, there are a lot of scopes, and going forward, we expect good growth in this industry, particularly Atmanirbhar Abhiyan and Production Link Incentive Scheme of Government of India is propelling the growth. Let's look at some of the strengths of this industry. The established player in this industry has a moat around the business. Moat means some sort of fencing. This means this industry has got a lot of entry barrier. New player cannot come in easily. This is primarily due to the nature of the industry, which is highly technical. Second thing, the established company has a very high ROC, return on capital employed. They're more than 30%. As you see, as we go forward, we look at some of the companies and then you can see that ROC is very high. Third is, this industry has got domestic demands, and also this segment of the industry is having a net export to other nations. So established companies got two options: local consumption opportunity as well as export opportunity. That makes this industry very lucrative in terms of growth and sustaining margin and growth. Nothing comes free of cost. They do have some challenges as well, or some risk associated. Like since it's R&D associated industry, you do require heavy amount of R&D. There's a chance of new chemicals or new methods getting found, which may be very cheaper, and existing company may go through some challenges. Since they are exporting, export risk is also there. And last but very important from retail investor perspective is complex industry. This is very complex. Person like me and you, we cannot find out what are the integrities of different chemicals which they manufacture and where it goes. Just to give you a quick brief, these chemicals are used in industry like pharma, agriculture, industry like rubber, and many other industries. So since industries are looking up in our country, domestic demands are likely to sustain and pick up. So from that perspective, this is a very lucrative industry. Guys, before I proceed further, let me tell you, like when I'm going to discuss about the stocks, these are purely for learning purposes. Don't take this video as an indication for making any investment. Investment in equity is risky, so please do refer to literature, study yourself, or consult your advisor before you take any decision. Let's move forward. Now I am going to pick up two companies from the industry. One of them is alkali amines. I didn't enter this stock for quite some time in the early part of the journey. Then I made an entry at a particular time, and if you look at this company, these numbers I have taken from Money Control. The EPS, the current year EPS is 61, which gives you a current year PE of around 55. So it's pretty expensive. Price to book ratio is also about 21, 22. So it's not very cheap stock. Market cap, if you look at, this is 17,000 crores market cap company. So it's a mid cap company. Dividend yield obviously for any growth stock is very low. So is the case here. If you look at the growth in the last 3 years, the revenue has grown with a CAGR of 26.4%, net profit has grown with 66.2%, and operating profit has grown 54%. So fantastic, very good. And when you look at some of the other parameters, the price earning growth is 1.34. Normally, a PEG of more than 1 means that stock is selling at a price which is higher than the intrinsic value generally. But this may not be the case all the time, because for growth stock, it is very hard to find it cheaper. ROC and ROE, this means return on capital employed and return on equity, these are 52% and 35%, which is fantastic. You won't find in many companies. Coming to other companies which I have picked up is Deepak Nitrite. Now this company again is EPS is around 80 and TTMP is 28. So if you compare these two, which may not be 100% comparable, Deepak Nitrite is cheaper and price book is also quite low compared to Alkali Amines. And market cap of this company is 30,000 crores. So Deepak Nitrite is around 1.6, 1.7 times of Alkali Amines. Pretty stable in the market. And Deepak Fertilizer is another company from this group. It's a very old group and decent management. So that also gives you comfort. In terms of growth for 3 years, this is 38% in the case of Deepak Nitrite and 26% for Alkali Amines, 114% net profit growth and 85% operating profit growth. So these numbers are really exciting. And this data I have picked up from Money Control. And the bottom, these two data are taken from Markets Mojo. PEG here is 0.42. This means this company is selling at a lower price than the value. So it has got fantastic value. ROC is quite high and ROE is also 38%. So these two are stocks. I do have investment in both. Although I picked up Alkali Amines when it was a little expensive. So let's move forward and look at some historical numbers or historical growth pattern of these two companies. What I've done is, I have, for comparison, I had taken a side-by-side charts of weekly prices using Trading View. And on the left side of the is Alkali Amines and right side is Deepak Nitrite. If you look at the price in 2020, sometime in March, when due to COVID, the stock market hit the, bottom. That time, this company was about 550, 560 type. Today it is 3,300. So almost 5.5 times has been growth in almost 2 years. Somebody who invested that time, less than 2 years, the stock had gone up 5 times. So is the case of Deepak Nitrite. Here the price was little lesser than 500 and today it is 2,300. So if somebody had made an investment 2 years back, the growth over here is almost 5 times, which will never even dream in, traditional methods of investment. That's why, guys, but never forget, investing in stock is risky. So do a proper preparation because you invest. Now looking back at technical charts, I normally plot 2 charts side by side. What I do, 4 hourly chart, which is there on right of my side, and the left side we have one daily chart. So here I take 30 days EMA and 10 days EMA, and on that Heiken RC is plotted, and then you have got volume and RSI. So now if you look at here, from the top of around 3,800 plus, today it is available at 3,300. So about 15% discount to the recent top. There have been a correction in this area and 15% discount is there. RSI also touched the less than 30 and then now it is rebounding. Now if you look at the daily chart where the Bollinger Band is plotted along with stochastic and MACD, stock is available at the lower band of the Bollinger and stochastic also giving a buy signal. So it's a pretty good time to enter this stock. But once again, do consult your advisor before doing that. Now coming back to Deepak Nitrite, here also chart is very similar. You see, from a height of 2,650, it has come to available at 2,250, about 400 drop. So almost good amount of drop is there, and again RSI is showing returning or pick up. Here if you go with Heiken RC also, there is a positive sign here which indicates you may like to make an entry here. Volume also in last couple of days is quite reasonably higher compared to earlier volumes. Again on Bollinger, it is at the lower end of Bollinger Band. That suggests that RSI, daily RSI also suggests buying and stochastic suggests buying. So both the stocks as per the chart and fundamentally are good stocks, and those could be bought at these levels. But once again, as I mentioned to you, buying in the stock, investing in the stock is risky. And you have seen that international market, particularly Nasdaq, has fallen about 16-17% in the last 20 days, whereas India has fallen about 6% in that particular time. So there may be further risk in terms of fall. But anyone who has got a long-term perspective, who want to be a wealth creator, getting into these stocks are attractive. But guys, once again, if you want to take an investment decision, please do study yourself. This session is purely for education purpose and drawing your attention to some of the stocks in a sector which appears lucrative today. With the expectation that you will do further studies, share your learning with me so that we are able to bring to you quality content. So if you have liked the video, please do subscribe to my channel and put your comments in the comment box so that I am able to learn from your experience and bring to you better content in future. Thank you very much for your time and stay tuned.